Have you ever wondered how the most powerful financial institution in history could be replaced? What if I told you it's already starting to happen, and Bitcoin is at the center of it all? Today on the TFTC podcast, I'm joined by Mel Mattison, former CEO of 3 different broker-dealers and an expert in global financial markets. What he reveals about the Federal Reserve's vulnerabilities and Bitcoin's potential role in our monetary future is fascinating. Having spent years at 1031 working with financial institutions, I thought I understood how fragile our monetary system was. But the evidence Mel presents about why Bitcoin could actually replace the Fed's functions is eye-opening. We're going to explore how Bitcoin could protect your savings in ways the Fed has failed to do, examine why the current system is more unstable than most realize, and reveal why the Fed's playbook hasn't changed since 2008, even though the problems have gotten much worse. The parallels between now and previous monetary system collapses are striking, and what Mel shares about our current trajectory suggests we're closer to major changes than most people think. Let's dive in and see exactly how Bitcoin could reshape our entire monetary system.
So I think if you have Bitcoin or you have gold as that monetary base, there's always that potential to revalue it, right? There's always that way where, we just had a global pandemic and we need to increase the money supply. And the way that happens is you have a you're actually benefiting from having a difference between the reserve asset and the transactional asset. So the transactional asset, what people get paid in, what they buy stuff with, can be devalued and increase the money supply in a time of global financial emergency. But at the same time, savers that own the gold or own the Bitcoin don't get devalued away.
Mel just explained is crucial for understanding Bitcoin's potential role in the future monetary system. Right now, when the government needs to create more money, like during the pandemic, everyone's savings get devalued. But with Bitcoin as a reserve asset, something interesting happens. The government could still create money when needed, but people holding Bitcoin would be protected from this devaluation. Think of it like having a fireproof safe during a house fire. Your valuables stay protected even if everything around them is burning. At 1031, we've seen growing interest in Bitcoin precisely because of this property. It can't be devalued by government policy. This is particularly important when you consider how retirement funds and pensions have been devastated by inflation over the years. Bitcoin could offer a way to maintain the flexibility of monetary policy while protecting savers, something that's never been possible before. The implications of this are massive. Imagine a world where government policy decisions don't erode your savings, where your purchasing power actually increases over time instead of decreases. This isn't just theoretical. We're already seeing countries experiment with Bitcoin as a reserve asset, but there's a bigger reason why this matters right now.
That the monetary situation is more acute and more dangerous and more fragile and more precarious than any of the big parties want you to know. It's the same type of a situation in 2007 when you had Federal Reserve governors coming out and saying the mortgage crisis is contained. Don't worry, this isn't going to spill over into the real economy. We've got it under control. And lo and behold, what happened? And so I think you've got people saying, look, Powell says the debt level's not unsustainable, but our trajectory is unsustainable.
This warning from Mel should send chills down your spine. The Federal Reserve and Treasury are painting a rosy picture, just like they did before the 2008 financial crisis. They're telling us not to worry about debt levels while quietly admitting our trajectory is unsustainable. It's like watching someone drive towards a cliff while insisting everything is fine. The difference is that in 2008, we didn't have a clear alternative to the existing system. Today with Bitcoin, we do. What's particularly concerning is that the current situation is arguably worse than 2008. We have higher debt levels, more global instability, and central banks with fewer tools at their disposal. The reality is that our monetary system is showing serious cracks, and those in charge are hoping nobody notices. Think about it. In 2008, global debt was about $140 trillion. Today, it's more than doubled. Central banks have already used their main tool, lowering interest rates, and they're running out of options. The system is more fragile than ever, and the people in charge are using the same playbook that failed us before. But what's really fascinating is how this ties into the broader problems with our current monetary system.
Creating a new global monetary system, not based on fiat, not based on the unlimited potential for governments to spend money so fruitlessly that you eventually get massive inflation, negative returns on investment, losses in buying power. If you want to avoid all of that, and you say, okay, we had this experiment from 1971 to 2024 where we were on a pure fiat world. We saw it wound up with $330 trillion in global debt. It wound up with massive inflation. It wound up with a bloated socialist-like governments. And the way to avoid that is to have a neutral reserve asset that can't be printed. And you go with gold or you go with Bitcoin or a combination.
The timeline Mel lays out here is striking. From 1971 to 2024, we've conducted an experiment with pure fiat money, and the results are in. $330 trillion in global debt, massive inflation, and governments that can't stop spending. Bitcoin offers something different, a monetary system that can't be manipulated or printed into oblivion. It's like going from a game where one player can create unlimited chips to one where the rules are set in stone. Think about that number again, $330 trillion in global debt. That's not just a large number. It's an unimaginable sum that can never realistically be paid back. We're reaching the end game of the fiat experiment, and the solution might already exist in Bitcoin. This transition won't be smooth. It will likely involve significant market volatility and resistance from traditional financial institutions. But as the problems with our current system become impossible to ignore, Bitcoin's role as a solution becomes clearer. What's particularly interesting is how this mirrors other major transitions in monetary history. The gold standard didn't end overnight, and neither did Bretton Woods. Each system reached a breaking point where the problems became too big to ignore. We're approaching that point now with our current system. The signs are everywhere, from record inflation to banking crises to unprecedented government spending. The question isn't whether we need an alternative to our current monetary system, but how long we can continue pretending that we don't. Let me know in the comments whether you think Bitcoin will actually replace the Federal Reserve's functions or if you think the current system can be reformed. I read every comment, and I'm especially interested in hearing from those of you who work in finance or government. And if you think this analysis of our monetary system is concerning, you need to see my latest video about America's potential $600 billion Bitcoin strategy to counter BRICS. The connection between our failing monetary system and these geopolitical moves shows just how close we are to major changes in the global financial system. Click the video on your screen now to understand exactly how America could use Bitcoin to maintain its global economic dominance. If you want to stay ahead of these crucial developments in the future of money, make sure to subscribe to the channel where we break down these important stories every week. Stay humble, stack sats,